Uh, Good afternoon, everyone. So for the next session, it's a great pleasure for me to introduce our speakers for the session for the topic on investigation on cryptocurrency. So before starting, let me brief about the speakers. There are two speakers in the session. So starting with Lakshmi Rao. Lakshmi Rao is a member of ICI with 32 plus years experience and is a senior partner in Sharath Associates and is heading currently Mumbai branch. She is a certified auditor of World Bank finance project, certified forensic auditor and certified money laundering specialist. She has vast experience in various types of audits like due diligence, statutory audits and concurrent audits. And she has also handled many digital currency investigations. Analysis of digital data and uses has been done as a tool in various audits in various industries. She has an experience of handling more than 150 plus investigative audits for central government, state government agencies like CBI, Enforcement Directorate, Narcotics Control Bureau, and many regulators like SEBI, Stock Exchange, private banks, and international banks. She has conducted various training programs at platforms like ISTM and CAFREL, which is promoted by RBI, and she has headed in the team providing investigative services and forensic audits for crypto cases to central and state investigating agencies like Enforcement Directorate, Economic Offences Wing, Maharashtra, and Special Investigation Team and Narcotics Control Bureau. She has also provided the SOP for the IT and investigations in the field of digital currency. She is a mentor and tax advisor at CATEX, Digital Asset Professional Taxation Solution. Coming to the other speaker, Guarav Mehta. He's a budding tech entrepreneur and blockchain forensic expert with a rich professional background spanning over 9 years in the field of blockchain and 5 years in forensic investigations. Mr. Mehta is a graduate of NIT Raipur and holds a PGDM in Technology and Innovation. In addition, he has also completed a course in digital currency from prestigious University of Nicosia. Mr. Mehta is a seasoned speaker. He has presented his research and insights on various platforms like TEDx and IMAI. He has also delivered lectures at IIM and IIT Bangalore, and he is a visiting faculty at National Academy of Direct Taxes. At present, Guarav Mehta is collaborating with Lakshmi Rao to operate CATAX, India's pioneering firm that specializes in blockchain and taxation services. With this, I hand over it to Lakshmi Rao and Guarav Mehta and request Sharath sir to welcome them.
Most welcome. It is my privilege. She is my colleague. I can't welcome her more than Lakshmi Nehru welcomed her. And thanks for accepting Lakshmi at a short notice. And thank you very much, Gaurav. Both of them had hands-on experience in handling crypto cases. I can say this is a closed forum, including the famous case where a Pune crypto case where an IPS officer is arrested based on their report. Let us listen to them more than my preamble about talking to them. Welcome, Lakshmi and Gaurav. It is a proud privilege for me. Thank you. Unmute yourself and Lakshmi. Yeah.
From Lakshmi. So me and Gaurav has investigated several cryptocurrency investigations. So he is the technical person in the cryptocurrency. So we have chosen to join, take the session jointly. Wherever there is a deep technical issues, he would be in a position to explain well, and he is more experienced in the technical side. Investigation side, I'm more experienced. So we both together able to crack the cases. Even the case sir has just now referred to. So we will we will show what exactly we will be covering in this session. First, go to next slide, Gaurav. So we will be discussing whether the cryptocurrency is legal or illegal? In our country, it is illegal, but is it illegal or not? We will discuss. And is it backed by any assets, or how it is cryptocurrency, how it works? Can we really trace the owners of this cryptocurrency owners? And can we really crack the case? And will it be in a similar way any other financial frauds or scams are traced, whether it is in a similar way, or does it require any special techniques and expertise, will be discussed in this session. So that is first I will answer the question whether generally everywhere we will be asked whether cryptocurrency is illegal. If so, why this is allowed, why anybody is transacting, why they are not banned from doing any transactions in cryptocurrency. So let me answer this question. Cryptocurrency in our country is illegal, but definitely it is not banned by RBI nor Government of India. So the transactions do happen. So RBI only regulated the cryptos, but it did not ban the transactions. So whoever does the transactions in the cryptocurrency, they are liable to pay taxes, whether it is income tax or capital gain tax as per the income tax regulations. And so basically cryptocurrency, though illegal, in some countries it is still not illegal. One can transact it. So how it looks, how the cryptocurrency looks, it's like a pyramid schemes. We will show as we go on explaining one by one. And basic important thing is cryptocurrency is not backed by any asset, and it has no boundaries across the world. So if I am sitting here, I can transact, I can send money to a person who is sitting somewhere in US or in London or anywhere across the country. So if you see the crypto regulation world map, you can observe red is shown for the crypto assets generally where it is prohibited. So in the world map, you see very few countries which has prohibited. See, green color is showing more, which is the crypto assets are allowed, including in America, it is allowed. So crypto assets are restricted in certain countries like Russian countries, and India also it is restricted. And in regulations are pending in many countries yet. So this is only for to show you how it is spread over, how countries are regulating, not regulating status. So so innovation of the blockchain. Now, this is the thing that everybody needs to understand. Now, we all know two-way bookkeeping. The blockchain technology on which the cryptocurrency is based upon is of three way of maintaining accounts. In normal accounting, when a payment is made, there is a debit, there is a credit. So that debit and credit is recorded by both the parties in their respective records. But in this blockchain technology, it is three-way maintenance of ledgers. So the third ledger is maintained by the third party. Now, who is this third party? Third party is these transactions. When a cryptocurrency transfer, payment or withdrawal happens, that time the transaction is validated by certain other certain other people who will authorize the transaction, and they will stamp it. The stamping, whoever does, if you see these ledgers are maintained in public domain. So one can see the address. If you have a wallet address, in that wallet address, you can see the transaction, which wallet the money has been transferred to, which wallet it has been transferred, and from which wallet the address from where we have received. So you can see transfer going out of our wallet, coming into our wallet, and the transaction code, and with the timestamp. And it will also show the day in which the value of that particular transaction in the terms of dollars also, if you want to see, that also can be visible. So now the problem of double spending in digital world. This in our next slides, Gaurav will explain in detail how this double spending is difficult in digital world, where we can pay in normal currency. Can you just go to next, Gaurav? So in normal banking system, we transfer from one account to another. And we use transfers with, say, PayPal, we use with Venom, we use with Visa payment, MasterCard, these payments. But this will take some time to get it transferred. Now it will even take 1 hour, maybe 2 hours, or some time, definitely. But in crypto, the transaction takes within minutes. Within minutes, that transfer happens, and the transfer is confirmed by the third party that from this wallet, the second wallet has received the money. That is validated by the third party, and it is hosted in the public ledger, which is visible to everyone. If we have the wallet ID, we can see how much transactions happened, in which day, what time, from which wallet it has come. So this is what is the public ledger. So this is the way three-way account maintaining is made in cryptocurrency. So go to next slide. So Gaurav will go ahead with the technology part. So when the case studies comes, I will explain. We have 2 cases to explain. So I'll explain one case, the other one Gaurav will explain. The technology part, Gaurav will take it.
Thank you very much, Lakshmi Rao, ma'am. Good afternoon, Reverend Sarath sir and everyone else. Thank you for tuning in and giving us opportunity to speak on the subject of investigation. This is very interesting subject, primarily from the point of view of ACFE students, because everything is going technology. Therefore, not just currencies, not just other things, everything is going to be digitized, and the forensic activity or the analysis or investigation activity will be primarily be done on the internet domain. We are witnessing already that as of today, while we have to prove a case wherein Facebook data is used or Twitter is used or everything else. Now, like I said, why the innovation of blockchain is so important is because of fundamental reason. When I'm having 100 rupee, I can spend only it at one place because that's a physical cash. But the problem on the internet or the digital world has been there. If I create something of a value, whether it be the bonds or whether it be anything else, I can send it to 2 people. If I have created some valuable PDF, which is of maybe say $1,000, I send it to you, you can replicate it to number of people. So the problem was that the value always diminished. So this is something what we call the problem of double spending in the internet world that has been there for many, many years. For the first time, blockchain came and it allowed anybody to transfer, ensuring that the same transfer does not happen. How that is going to shape the payment system or the trust system is because whole Uber payment system, banking system, that is based on the trust, wherein some party in between, even if you take a Flipkart, that is one party that comes in between and ensures that the vendor is sending something to you and you are sending the money. So now for the first time, it is possible because of the blockchain that the trust can be automated. We are going to see what are going to be implications on that and how that is correlated with your practice. Now, technology, we have seen the growth of internet. Internet is nothing but some code that are able to talk with each other. So TCP/IP protocol allowed 2 computers to talk to each other. Now, millions of computers running the same protocol, this is something called the internet, to put it in a very simple term. That was the step 1 of technology's evolution. The second step came okay, we are anyway transferring information. Why cannot I access information temporarily if I need? That's where the HTTP came in, and we were able to see some information that is served by some other computer. So when you access facebook.com today, https facebook.com, there might be a server in Bangalore, Delhi, Hyderabad, or maybe US that is serving you a certain page. So that created another acceleration of evolution. Now, likewise, the protocol has been innovating. Thereafter came what we call SMTP protocol. The postal service was very much slow and expensive. Internet allows us to send messages across the internet in a standard way. So we have the SMTP protocol. We use it today. Gmail is a SMTP protocol. Hotmail is SMTP protocol. Zoho is SMTP protocol. So that's how the exchange of email happens. Now, people took it further. They said, why cannot we do the voice communication or video communication? That's where the voice over internet protocol came in. Skype pioneered, and a lot of other companies pioneered that. And that has become very integral part of our day-to-day life. Now, people started thinking, okay, we have came so far. Why cannot we create a protocol wherein we can transfer anything over the internet by ensuring that it is not double spent? So that is something on the vague words of blockchain. But we are going to see what exactly is the blockchain. Forget about cryptocurrency, forget about everything else. So when we say what is the blockchain, we can consider it as an incorruptible digital ledger. That means it only resides in the digital domain, somebody's database, which can consist of economic transaction or, as a matter of fact, any other transaction. I can say hi to you over the blockchain, but probably that wouldn't make sense unless that is very important communication. So primarily people are using blockchain to ensure all the economic transactions are done there. First application is currency, but there are more applications that are happening as of today. So this blockchain has the ability to program in whatever you want to do, whatever you want to transfer. You can transfer bonds, you can transfer credentials, you can transfer anything else. You can tokenize your land, you can tokenize anything, you can fractionalize anything and move it. So when we say blockchain is something just a ledger that is not maintained by one party, but many parties. To further clarify that, imagine a Google Sheet. Right now, when you create a Google Sheet on your Google account, you share it with your friends and you together work on that. Now, imagine a Google Sheet spreadsheet that is accessible by thousands of people at the same time. At any point of time, somebody does any changes. Maybe they give Lakshmi Rao ma'am 100 rupee on that Excel sheet. Everyone else who is running a copy of that Excel sheet, they get a notification. Okay, Gaurav has transferred 1,000 rupee to Lakshmi Rao ma'am. Please check into your existing Excel sheet and let us know whether that is right or wrong. So everyone starts looking into their Excel sheet and they vote yes or no. If 51% of the people say yes, that means that transaction is legit and it gets engraved into the database. So in that way, without knowing who the party is, I am trying to maintain the integrity of that ledger. So at any point of time, there is no single place wherein the ledger exists, but at the same time, it exists at thousands of places. So even if I want to kill it, if I shut down one of the Google Sheet, that means 9,999 Google Sheets are already there. So this is, one of the trouble, one of the good thing, one of the bad thing. So that is what we mean by decentralization. Now the question arises, why do we maintain a Google spreadsheet? So the answer is, I am incentivized to do it. So in the blockchain, the first implementation of blockchain or Bitcoin, there is an economic incentive for you to manage this Google Sheet, which is visible or for which we get rewards. You can call it a reward or just a simple pointers. You can also call it a cryptocurrency. You can call it an asset or digital asset, however you want to call it. So that's how the new cryptocurrency or the digital asset is created, and the integrity of the ecosystem is maintained in a democratic way. This is a brief supply of the incentive that the people have been getting, and this also gives us the supply of the cryptocurrency up to 2,140. So last cryptocurrency of the Bitcoin would be created by that period of time. So people are saying that, okay, this is a very much a predictable money supply. We want to call it a money. People call it, okay, there is a limited supply, therefore we want to call it a digital gold. So let's just stop here for a moment and try to understand what is cryptocurrency primarily in the context of Bitcoin. It's a different lenses to look depending on who you're looking at. It is also money. It is also the stock of this blockchain. It is also an asset class, can be or cannot be based on how the industry or the we recognize it. Some people like to call it a digital code because there are only limited number. Other people try to call it, okay, it's a decentralized currency which the government cannot confiscate, the law enforcement cannot confiscate, etc. At the same time, other people are saying the blockchain can be implemented in a lot of different verticals. So same thing, depending on from which point of view you are coming, you can have your own definition. But as a ACFE, I mean forensic practitioner, most important part or the interest to you should be the digital currency, the blockchain part. So herein I'm leaving to you guys whether that is a money or an asset. So that is anyway subject of a debate. Let's not go too much into the theory. What I want to conclude you here is, at the same time, it is a commodity, because if I'm an individual, I'm going to some place, I'm buying that. Maybe I'm considering it as a commodity or an asset or a stock. When I'm transferring it to someone else overseas for any purposes, that automatically becomes a kind of a currency or a medium of exchange or the transfer of value. If someone out there who is using blockchain to do new innovation or create new use cases on that, for them it becomes a technology. So depending upon who you are, it plays a different role on that. Now, like I said, blockchain is an innovation. Bitcoin is the first implementation. People have tried to take this core protocol or the core code, and they have created a lot of new things out of it. People have tried to create a decentralized Facebook. They have tried to create decentralized Twitter. As of today, decentralized email is also there. Decentralized Amazon, Flipkart, everything is what people are trying to create a decentralized, because herein the core the rules of transactions or engagement are defined in the blockchain. We are not rely on the party or the human or call it anybody else as an institution. So this is what making people excited, and everyone is creating new use cases. One of the biggest use cases that has gained traction across the world is a Ripple. So far, we have been using Swift in order to do international payments. So Ripple created some kind of a more lightweight and faster network that allows interbank settlement in a minutes, or in fact in a seconds. But obviously it would gain traction as we move forward. So like I said, that understanding the blockchain and the investigation is not just empowering you to do the investigation, the cryptocurrency cases or the scam, but in upcoming future, it would help you to do more and more things. The reason being, there is a large number of companies which are trying to tokenize assets on the blockchain. Assuming there's a property in the Miami, which is a $5 million, obviously you cannot buy it. People are fractionalizing it and trying to sell it to different parties across the world. There are companies that are trying to create a credentials on the blockchain. For example, if you pass successfully from the ACFE, then probably they can create the credential for you so that it's valid. Anybody can validate across the world. So a lot of IIT Kanpur has issued their certificates on the blockchain. That is another use case. Land records are being created on the blockchain. So probably tomorrow, whenever the land scam or something else happen, you will need to look at the blockchain. Issuance of bond is happening. There are new stable currencies are being created on the blockchain. A lot of governments like Ecuador government, Venezuela government, other governments have been creating the proxy of the value. Right now, proxy of the dollar is created on the blockchain, what we call USDT or the USDC coin, different coin. So those represent the same dollar on the blockchain, which are easy to move. A lot of different use cases are coming, like I said. So any questions so far? Okay, let's continue. So as of today, the ecosystem is north of $1.5 trillion. It has touched more than $3 trillion, which includes cryptocurrency market, NFT market, exchanges, decentralized finance and all. That means this is no more a small economy. This is no more some kind of experimented, but something that has been recognized across the world. Therefore, the question arises, is blockchain auditing or forensic activity something a very mandatory skill for the futures, or it is just going to be limited to the cryptocurrency? I would appreciate if you students can say yes or no in the chat box so that we can also know what your thoughts are. We'll stop for 30 seconds and see what everyone has to say. Votes are open. Yes. Let's make sure not everyone is sleeping. Oh, now more yeses are coming. Great. Anyone know? That would be interesting. Okay, I think here most of the people are saying yes, and okay. So yes, everyone is almost yes here. That's a good thing. Yes. As of today, the RBI is also working. I mean, they have written their pilot of CBDT. That means tomorrow, if something happens, some kind of a scam or investigations required, your blockchain auditing skill would not only be useful in the cryptocurrency, but also the CBDC domain, which all the countries across the world are trying to roll out on the central bank level. So yes, therefore, it's safe, or it's safe to assume that the blockchain auditing is just not limited to the cryptocurrency, but a mandatory skill for the future auditing. Okay, next slide. So what happens in the cryptocurrency? Cryptocurrency empower you to do one-to-one transaction. Right now, if I want to do transaction from India to maybe the US, I need to rely on my banking partner or maybe central bank or anybody else. But Bitcoin has equipped you with ability to send money anywhere without relying on anybody else. So any part of the investigation should start with, okay, how does people start acquiring this? So like I said, the blockchain is the core ledger whose analysis is which we are going to understand. But obviously on that ledger, either they're acquiring cryptocurrency, or tomorrow somebody would be acquiring bond, or somebody would be acquiring some kind of fractionalized assets, or whatever be that. So at any point of time, we need to understand what is the stepping stone, or what is the first step wherein the individual touches the blockchain. So taking the example of Bitcoin, Bitcoin is acquired by either running your computer. Like I gave example in the earlier slide, wherein if you are part of a Google Sheet, I mean, if you maintain Google Sheet with the team, you get a cryptocurrency in return, or the rewards in return. So that is the first time a new cryptocurrency or the reward point that is created, I get that. So the first time this money comes to me, for example, when the money is printed in the Nasik, probably RBI gets the first hands on that. I do not know the distribution model of that. So likewise, when the first cryptocurrency is created, it always reaches out to the miners first. And then miner may be distributed to their friends, families, exchanges, or anywhere else. So that is where the first step. That means we are going to take a look at the blockchain and see what the mining transaction looks like. But every transaction that you go back, if you start auditing any transaction, if you go to step by step back, maybe after 2 step or maybe 500 step, it is always going to be the mining place. Second step is obviously I cannot do the mining. I don't have a computer competency, tech competency, and all those things. So people rely on purchasing of those crypto. Either they go to exchanges, create a KYC account on national exchanges, international exchanges, wherever they are comfortable. They deposit money and they buy crypto there. The second way. Other people probably look into friends and family. Maybe there are a lot of OLX like websites. This is what we call peer-to-peer, person to person or peer-to-peer. I try to identify on OLX like website, okay, is someone trying to sell me cryptocurrency? Is someone there with the offer? If I find that offer fine, I engage with them and the transactions happens. Whatever be the mode of settlement, either I do in the cash or I do it in any other mode of settlement. Now, probably this transaction is not known to the government or investigation agency or anybody else, because that is happening peer-to-peer. This is one of the concern, but at the same time, it is not a concern. We'll understand on the later stage. The third part is there are a lot of IT folks in India, the service providers in India, which provide services. A lot of Bangladesh designer provide their designing services, and in return for that, the US clients provide Bitcoin. I, as a developer out of Bangalore, I am providing services to some US guy. I would say, please send me in the Bitcoin. I don't want it in INR for whatever reason. So probably these are the this is another mode of crypto acquisition or receiving crypto that might not be known to the existing, I mean, the participants of India, but probably if the person who is sending from the US, if they are sending from their formal account or maybe some exchange account, then that particular government knows or that particular agency knows that this transaction has been done. Obviously, the India might be blindsided on this. They might not know until you disclose on it your own. And there is obviously the another fraudulent way of acquiring cryptocurrency, where I give false promises return to the market participants, say you are going to this return, you are going to get that return, let me give you this and that. All those things, scams are obviously, they are very creative. It can be number of ways. So this is a brief methods. I mean, these are the only methods how in the cryptocurrencies are acquired by the majority or all the participants of the ecosystem. Now, who are the participants of this ecosystem? Mining, who are creating new cryptocurrencies. Then there are ATMs in the countries abroad, wherein I can go, they give me QR code, I send some QR code to that ATM, and it churns out dollar or euro to me. So that are the ATMs out there. Today, as of today, up to $2,000, the government abroad has allowed anybody to do transactions. Is above that, you need to do KYC. Then there are crypto exchanges. In India, we have many exchanges. Internationally, there are a number of exchanges where you can go and create account, transfer money. Then, like I said, there are peer-to-peer exchanges, OLX like website wherein you can do the discovery of the seller, or if you are if you are a buyer and if you want to see someone is interested in buying, then you can go and discover that also. Then there is a dedicated companies that are allowing you to create cryptocurrency wallet, because not many people are technical, they don't understand how to create a wallet, maintain a wallet. So that has created a new line of business wherein the business just only provides you the cryptocurrency wallet. And there are lender, hedge fund, etc., which are just the evolution of the space. Now, to get into the investigation, we need to understand the modus operandi of the exchanges. What actually happens on the exchanges? Because majority of the activities across the world, 90% of the activities are consolidated at exchange. So if we understand the exchange well, then we probably would be able to understand the context of whatever the investigation part would be working on. So when you go at an exchange, you do the KYC. Second thing, once you do the KYC, they allocate you some kind of a wallet address. For example, when you go to the HFDC, they create a account for you, a unique account for you. Likewise, cryptocurrency exchanges, they create a unit wallet address for you. Now this wallet address is capable of receiving crypto, and assuming if you have a crypto there, you would be able to sell also. So that's one part of entry. Second part is, you don't know from where to buy. Maybe you do not have any friends, or you do not know. So other thing is, you deposit money with the exchanges and you buy from that exchanges. So exchanges does not transfer cryptocurrency to you and that wallet. They have money in their treasury and they say that, okay, you have a 5 Bitcoin with us. That is also a risk, and that is also a good thing, because during the investigation, you are able to find money lying with the treasury. That means that treasury is a customer. I mean, if I'm investigating and my investigation leads me to the treasury of US exchange, that means the person whom I'm investigating is available on that exchange. I can send a law enforcement request, LR, or any other mode, and I can seek information from them. Now, another method is, customer creates account with the international exchanges and transfers the fund. If I am some kind of a illicit participant, I'm aware that I'm doing tax evasion or some, probably I don't want to create an account in India. I would create account in some exchange that is not compliant or cooperative within India. At that point of time, what I do is I create an account with in countries like Seychelles, Hong Kong, China, and I tell the parties with whom I'm engaging to transfer crypto to that international account rather than my account. Depending upon the sophistication of the individual, there are different ways. Now, again, when you purchase cryptocurrency, you move from one currency to another, and again, you try to do the layering part of it. For example, I created account on Indian exchanges. From whatever sources, I had around 10 Bitcoin in my non-KYC account. I mean, some account that is not known to anybody. I transfer one cryptocurrency to that exchange, I sell that, and I gain money. I realize money in my bank account. Another way is, if I'm trying to be much more smart, or I'm trying to do some more activity, then probably what I'll do is, on exchanges, I will buy crypto, I will convert it into another crypto, then again, I will convert it into another crypto, so and forth, in order to create a confusion around my book analysis. That is a standard mode, how the people are trying to cloud their transaction. And thereafter, people also try to, I mean, customers or whoever is engaging on the exchange, they also purchase crypto and convert to another crypto. There are few of the cryptos like Monero or Zcash, which are exactly a clear indication that the person is trying to do illicit activity, because those are the privacy preserving crypto. Investigation or the blockchain analysis on that is a little difficult task because of its inherent nature. So when you see the transactions of individual, it can range from trading or deposit or withdrawal on the exchanges, or maybe conversion of the crypto, or engaging on this more radical privacy preserving crypto like Monorio. So based on that, you get a simple or basic idea. Okay, what kind of probably the customer is? Is it a good customer, potentially someone that is of interest to us, or anything else? Now, how exchanges work is, like I said, you deposit crypto, you buy cryptocurrency, and then trading and all those things. So question arises how the wallet looks like. What exactly is the wallet? There's always a confusion. Whenever see wallet, we think of the wallet in our pocket. But here I want to create a parallel on the wallet. You have your email address, Gmail probably. With that, you have a password associated. Now, this service is provided by the Google, Hotmail, or the Yahoo. At any point of time, you forgot the password, then Google allows you to verify yourself and reset it. But technically, that is just a email address that the company has provided you as an identifier. Likewise, email address can be thought as the same as public address or the wallet address where you can receive the cryptocurrency. Second part, password, same as password, we have private key in the wallet, wherein this private key allows you to transfer the crypto to anybody whenever required. The third part is herein the Google was a service provider, Yahoo email. Likewise, herein the bifurcation happens. You can go to certain wallet service provider just to create a wallet, option 1. Either you can go to exchanges to create a wallet, transact, receive crypto, or anything else, step 2. Step 3, you can go to some e-commerce website wherein you can buy hardware wallet. We'll see that what hardware wallet is. Or the worst part is you can create own wallet. We'll see how that wallet is created live here. So herein, if you see below, we have a Bitcoin address. This is how it looks like, some random digit. And we have associated private key. If someone has gotten this private key, that means they have access to all your funds. It's simple as that. Therefore, this is good also or bad also, depending upon how you see it. A lot of people say, okay, I'm having absolute power of my cryptocurrency. I am my own bank. I have authority. But at the same time, if you're not comfortable handling this key, this can be a curse for you. So this is what the wallet look like. A brief of wallet look like. I'm going to stop here and create some random wallet for you. So like I said that in banking system, you have to create a wallet. You have to create account. You have to go to banks to allocate one account for you. But in cryptocurrency domain, the codes are available in open domain. That means you can create what we call offline or no KYC wallet without anyone knowing how the wallet is created or where the wallet is created. So this is a website wherein open source code is available. There are thousands of websites like this. This is not something proprietary. Herein, if you see, I am moving my mouse. So this is creating some kind of a randomness. Okay. So that two people cannot have same account. So just a second. Bingo. My Bitcoin wallet is created. This is a private key. Obviously, I'm not going to accept crypto in this wallet. Anyway, I do not deal with crypto. So assuming I'm accepting this cryptocurrency, and if you guys know this wallet address, my private key, then you would be able to have access to all my keys. And that's how the hacking happens. They try to identify the key size of this bytes, and they do all phishing tactics in order to gather your key. Now, how do you receive Bitcoin? You just copy paste this and you send it to whosoever you're transacting with. Okay, sir, transfer me cryptocurrency to my this wallet address for this much amount. I mean, for this much value. So now you have received this cryptocurrency. Nobody else knows about it. That's where the things get tricky, or I would say more exciting. People think that I am not trackable, but this is one of the most trackable thing, as we'll look into the later stage. How again? Because every audit trail is available in the blockchain. It's only for you to do meticulous analysis, and you would be able to even find the information back since 2009. There has been a lot of cases. I mean, there was a case in 2015 which FBI cracked, I think last year. There was a case in 2016 wherein FBI confiscated, I think, $4 billion related to Silk Route, etc. So that has been happening because 4, 5, 6 years back, people thought that the cryptocurrency is anonymous or nobody can track it or trace it, and they did a scam. They held on to that. Now, after that, they try to transact with the exchanges or they try to liquidate it, and that's where boom, they got identified, the identity of the person was revealed. How that disclosure happens or how that discovery happens is always the case to case basis, but he will look at it, two of the cases here. Now, another thing I want you to, I mean, these are the fundamental things, that's why I'm stressing here. So right now, when you look at your pocket, you might be having 100 rupee note or you might be having 500 rupee note. You don't know how many cities or the places it has traveled. So that's actually anonymous. But when you have received any crypto, it's pretty easy to identify where it is coming, what it is coming. So let's say I receive 500 rupee worth of crypto. Now, let's say it is associated with some kind of a illicit activity. The worst part is, even if 1 rupee, 500 rupee was there, so I spent 10 rupee at one place, 20 rupee at other place, 50 rupee at other place, whatever be it. Assuming I do one mistake and 1 rupee gets into the known place, that means it's pretty easy to identify the whole cluster or whole person or whole set of transactions. Therefore, criminals who think that the crypto are good have realized that crypto in fact are bad with time. So this is the worst part or the good part, that investigation is easy. It's just that we need to get a fundamental understanding of the technology and get comfortable with it. Only thing is that there isn't too much of information. Going back to the slides. Ma'am, you want to add anything here? Okay. So like we said, assuming you're a good citizen, you'll use this information for the good thing. Now, there are 3 types of wallet address. This is a wallet address that was created because it might be safe or it might not be safe, depending upon how I'm handling. The market evolved. Market said that, okay, let me give you a software wherein you can save your keys safely. Other people said that software is always bad. They created dedicated pen drive or hardware which allows you to create wallet address so that you can accept the cryptocurrency. It is always not in touch with the internet. If you require to do transaction, you can use it and you can transfer it. And there is a third party, third party custodial services wherein you trust someone else and you provide cryptocurrencies or the wallet address to them and they hold on to you on your behalf. So this is what a digital wallet address look like. A app, screenshot of the app, nothing fancy. This is an example of hardware, a dedicated pen drive or the electronic devices is that create wallet for you. It creates a number of wallet. It creates Bitcoin, Ethereum, and whatnot based on your need. Now, let's stop again and understand how the things are going to change as you move forward. In past, I mean, before the cryptocurrency, the banking system were the primary mode of how most of the large amount of transactions were done or the cases were done. Whatever the investigation required, we always went on to the bank and try to get the information and try to do analysis on that because yes, money is anonymous. Now with cryptocurrency, it has provided the technological ability for anybody to create not 100,000 but millions and millions of wallet with basic laptop and code. That means the approach for identifying the transactions or mapping those in the past are obviously applicable in the future, but there would be more and more scenarios that are coming in. For example, in past, there were some odd 300 ways to launder money through shell account, through shell banking, or different methods. Create a proxy account and then move money. But the technology has allowed us to create, like I said, millions wallet, then probably allocate $1 in those 1 million wallet and do more complex scenarios because everything is technology driven. We would be able to do things at this scale. So the challenge would be today, what are the patterns? Are we able to identify the patterns? Are we able to segregate the habits of a wallet? On basis of that, what kind of intelligence we would be able to gather? Because for example, your transactions on the banking CIBIL is able to analyze your credit rating, what is your net worth, etc., etc. Likewise, when I observe any wallet address on the blockchain as of today, depending upon my inference capability, I would be able to profile. Okay, this guy is only trading in this cryptocurrency. Okay, he has been trading since 2009 to 2022. Okay, then he moved funds from one place to another. So like I said, that information is going to be there, new scenarios is going to come. It's only we have to rethink, or we have to infer or learn how to infer those data points available. Now, in past, it was all like manual activity. We used to check, okay, kahan se paise gaye and how did it move? But in the blockchain domain, this won't be possible. I mean, for the majority of the cases, this won't be possible at a human level, because most of the times you have to deal with not just one wallet, 20, 50, 100, not 100,000, not 10, 20 transaction, but hundreds of transaction on the case basis. I mean, what is the complexity of the case? But in future, depending upon the cases that you might come across, probably you would be able to get most of the tasks done on the human level. Another times you would be requiring some kind of a automation where the service provider are available to provide you some kind of information. But if the nation, or if we want to mitigate the larger kind of a risk into the ecosystem, we need to build that automated capacity to take a preemptive measures. So that is at least what we are looking at, the evolution of the space. So why people are daunted by the cryptocurrency, I mean blockchain transaction? So like I said, that it seems easy. It is definitely easy. But here in the new twists are coming in the blockchain. UPI, a lot of scams are happening as of today on the UPI. Because UPI allows, assuming you have one bank account, UPI allows you to create multiple what we call addresses. I can create Gaurav@YBL. I can create Guarav Mehta @ICICI, etc. Every day I can create new addresses. And if I'm a Jamtara, or if I'm somebody else, then what I do is I send someone to send money on this particular address, then I destroy it. I send someone else to send money on that, and I destroy it. And it becomes little difficult. During the investigation, obviously, the law enforcement or the investigating agency reaches out to UPI, NPCI, and try to gather the information, or tries to identify the ultimate beneficiary of that. But most of the people face a problem. Okay, these every time new accounts are coming in, who are the people who are creating it? So that's the problem that is coming in. Again, taking a parallel from the crypto, banking and UPI. In banking, you were able to reach out to limited people, do the scams or illicit activity because your limitation was there. In UPI, probably because of the technology, you're able to reach more and more people. In crypto, this is going to be much more scalable, because now it's not just one country, but thousands of countries. So scams have become more, cases have become, or the modus operandi of the crime has become more complex, wherein the technology has now provided the ability to criminal to scale their operations on the world scale. We have seen that kind of activity from the North Korea on a very large scale. So that is a concern again, but exciting times. So we have been talking too much about the blockchain. Ma'am, you want to take it through the blockchain, or should I continue?
You continue. I'll join at case studies.
Sure. So this is what the blockchain look like.
Sorry, both of you divide the time. One is the conceptual concepts are very well explained. Case studies are also important. So both you merge it and manage the time to the extent of this thing.
Yes, sir. Yes.
I don't want you to rush in the case studies, Gaurav.
Sure, got it. I'm just almost done, because the creation of platform was very mandatory.
I'm not asking you to hurry up. I'm asking you to balance for both. That's all.
So this is what the blockchain looks like. I mean, we have talked a lot. So this is a wallet address 19QL. It has done 96 transactions since its inception. So total of cryptocurrency received was 391 BTC, and total number of sent was this much. That means the user of this wallet address has stopped using that. We can look into the transaction. The last transaction was done in 2018, wherein the person has sent 3 Bitcoin to some address, and other nominal amount to some other address. Again, we can look into the transaction, scroll that, and get more and more inferences. Okay. Just keep a snapshot of this, and I'm going to, in the case study, I'm going to give you a specific example. What kind of information can be extracted from this anonymous wallet address? Now, stopping here, what kind of investigation would be required? A lot of times, what people are trying to do is, because cryptocurrency or the blockchain code is open source, so they create a copycat of cryptocurrencies and tell market this is the next Bitcoin, or this is the next Ethereum. Because anyway, I won't be able to buy $20,000 worth of Bitcoin. It's very costly. And on the ground, people do not have that much educated. I mean, we are still teaching people not to send OTP, to forget about Bitcoin and the complexities of that. So one of the most prevalent scam is people creating copycat cryptocurrency. They acquire crypto from the people. They say, you give me 5,000 rupee or 5 worth of Bitcoin and whatever be the other cryptocurrency, and accumulate those. Another, this exchanges that crop up in the countries, I mean, that has almost become negligible now. But every year we see a wave of new exchanges coming in. They're doing a lot of flashy marketing, onboarding many customers, and one day they go like they black out. Then there is a fake wallet. You go to Android or iOS, not iOS that much, but when you go to the Android, you see a lot of wallet service provider claiming we have this security, we have that security, we are safe. You create wallet address with them and you start using it. For some period of time, they allow you to send Bitcoin, do Bitcoin, and suddenly out of blue moon, you see that my crypto is gone. Obviously, there's no grievance mechanism available. You cannot go to Google. You do not know company. So, I mean, this might not sound like a big thing, but people on the ground, especially in the tier 2 and tier 3 cities, get scammed a lot from these kind of things. Now, obviously, there's a pyramid scheme or the Ponzi scheme considering the complexity of the subject. One of the most well-known is a mining scam. Okay, we have a mining capacity in the US. You give us some money. We are going to run computer on your behalf. And whatever be the reward that will be coming to you, we will keep 10% of that and we will give you rest of the 90%. Sounds good? Then you say, okay, you create 2 more customers underneath you. And such kind of Ponzi schemes are always there. They just keep on changing the face. Sometimes it's a mining, other time it's some kind of a return on investment, other time it's a DeFi, other time it's NFT. The scammers are always coming with a new and creative ways to do it, but at the core, it's always about incentivizing the people to bring on more people without actually giving them some kind of a value. There's always a pump and dump scheme, which is again the activity, I would say. Then the impersonator. This is one of the most prevalent activity. We use a lot of different wallet address websites in order to transact with the crypto. I go to Binance, I go to CoinDCX, WazirX, etc. The scammers scammers create a fake website which looks exactly the same as these websites, and they send you email or anything else so that you can click on it, and thereafter they do the phishing. So there are impersonators of the apps, there are impersonators of the Google Chrome extensions, websites, etc. Now, question arises: why this crypto is adopted by the criminals? Primarily because you are scared of the crypto. I mean, by you, the country, law enforcement, and majority of the people. and that is the primary reason. I wouldn't say that's because of the complexity of the technology, but everyone is scared. Law enforcement, everyone. Second thing is, we being the incumbent, I mean, the government, organization, and law, we are always little laggard in terms of innovation, and these are the people who face maximum resistance in the financial system. Therefore, they are always looking at a new and novel way of the criminal activity. So yes, it is largely used by the criminal, but the number has been growing with the time. Again, cryptocurrency, like I said, is not anonymous at all. But they think that is anonymous, and depending upon who the investigators are other end, it can be pseudo-anonymous. Again, it is a portable. You can have $1 billion worth of cryptocurrency just on the pen drive or the wallet or even memory. It has a liquidity across the international borders, especially the government is not able to track and all those things. Now, let's look at something practical. Ma'am?
Yeah. So we'll see how practically for investigating a cryptocurrency case, how it goes, where we start, how do we understand whose wallet is this, whose this wallet belongs to whom, and how do we establish. In a normal financial frauds itself, we have a lot of challenges. We just heard in our previous lecture, Alok sir has told us how difficult to prove, though we have a red flag. We have so many other sources, open sources, from where we find the data, we know the relationships, we know the person sitting in front of us, we know people, we know their activity, everything. In spite of that, it is difficult to prove a scam or a fraud and get the evidences that are tenable in court of law, unless otherwise we will not be able to establish or convict anyone. So the challenge is there in a normal financial frauds. In case of cryptocurrency, where it is digital transactions, and how do we prove a transaction is done by such and such a person, and this transaction is between A and B. How do we find out who is A, who is B? Can we prove this in court of law? How do we do that? So these are all the challenges, that inherent challenges in digital currency and cases of cryptocurrency scams. There are so many scams that are happening across the world. Fortunately, we could do certain investigations in this field, and we could establish and find the evidences and establish it with the documentary evidences and with the relationship establishment, and through certain information from exchanges and governments across. So I will show one of such example where we have investigated, and we have given police has charge sheeted based on the evidences that we have produced in front of them. So we have a case. It is like where they have offered, the scamster has offered to buy 15 bitcoins, and he will get 27 in 18 months. And they also said, if you invest X money, you will get the return in cryptocurrency. So every month you will get addition to your cryptocurrency, and annually you will get this much. So that was the return that he was promising the investors. So the investors naturally are interested in high return. So they have invested. They could I think collect across about 80,000 into at sixth place. I think 4,80,000 investors he could pull up, and he started using the money in starting mining with high-end computers, and he started mining activity with the money he collected. And to give the investor cryptocurrency in return, he has to mine. He cannot purchase and give. So he has to mine. So he mined the cryptocurrency, but did he pay the investors? That is the question. So since he did not pay, that is the scam that we have investigated. So how he did, we will show. We investigated, I'll explain. Fundamentally, how we see the transaction happens, we have to see, like, for example, here in this slide, a multi-input clustering transactions you'll have. See, address, the A is one wallet address, B is another wallet address. These two have a transaction T1. Okay, and they must be controlled by, say, X is the person who is controlling these two transactions, these two wallets. Likewise, there is another wallet C also, and this address also, this wallet also, they are transacting B and C. There are transactions between A and B, and there's a transaction between B and C. So during my investigation, I will see there's a common wallet here is B here and B here. So definitely my understanding would be the person who is doing the transaction between A and B is also common in the transaction between B and C. So I will imply from this that the person who was part of these two transactions is having knowledge of A, B, and C, three wallets. So I will say X has knowledge of three wallet IDs. So probably it belongs to a common person. So this is one assumption we go ahead to understand the next level of transactions. So yeah.
Ma'am, just I would like to just go back in the old presentation and clarify one concept here. So that's why. So remember, we talked about, I talked about the UPI example wherein a person always create new addresses to accept money from different person. They create Gaurav Mehta 1, okay, send me $100. Gaurav Mehta 2, send me $200. So in this example, let's say I have created 5 addresses, UPI addresses, and I have told parties to send 100, 200, 300, 400, 500. So total sum of $1,500 I accepted on the UPI theoretically. Likewise, cryptocurrency also allows you to create multiple accepting address with the same key so that I don't have to handle many. Now, when I have accepted this 100, 200, $1,500 in different wallet address, you as an observer, you as a one of the observer, you will be knowing only one key because you have sent only 100 rupee to me. When you go and check in my wallet address on the blockchain, you will see that the 100 rupee that you have sent, okay, Gaurav has only 100 rupee. You will be stopping there. Other person who has sent me 100 rupee, when he goes and checks the blockchain address, he'll see only 200 rupee. So this is the fallacy here. Now, what happens is I take this 1,500 rupee, I go to, let's say, London. I spend 1,000 rupee at some posh, let's say I buy some posh bag for $1,000. He is accepting cryptocurrency. I have to send him $1,000 worth of crypto. I log into my key or whatever be that. As soon as I send him $1,000, how the blockchain functions is it checks my wallet address. It checks wallet address 1. Okay, 100. That is not enough. Gaurav has told me to send 1,000. It checks second, 200, 300. So likewise, it clubs until and unless it reaches the threshold of 1,000 rupee. So herein, because I had to send 1,000 rupee, transaction number 1, 2, 3, 4, all will club together and they will see one transaction to the back company wherein I am sending 1,000 rupee. That's one scenario. And now when someone will look at that transaction, when I have done it, they would be able to discover that 1, 2, 3, 4 all belong to me. That is scenario number 1. That is what we call the clubbing of the transaction or the change addresses. B scenario. Okay, I didn't like $1,000 bag. Let's say there was another $1,200 bag that I wanted to send. Okay. Now for that, I have to consolidate 100, 200, 300, 400, and that becomes 1,000. My rest, my last one has a $500. So what do I do? Okay, because it's all, well, every transaction gets joined. I cannot take like $200 from last 500 one. So I join all 1,500. I send 1,200 from that, and another 300 I send it back to my account, new account. It can be new account or it can be old account. So assuming it is old account, then it's pretty much simple for any investigation person. But what people do is they transfer money and rest of the money they send back into the new wallet address, which actually belongs to them. So herein, where's the example? Sorry. Yes. Herein, see, when we are, hopefully you are able to see, okay. Herein, when we see these two transactions, 19 QL and 1 CS, this both belongs to the same party. Herein, when we see the money being sent to 1 NXV, that means this guy wanted to send 3 Bitcoin to someone else and rest of the Bitcoin has gone to another address. That means this probably, with a high probability, it belongs to the same person who is the custodian of this both wallet. Again, this guy not only had this 2 wallet, this guy received it from this 2 different wallet. Okay. So that's one example. Again, in this case, this particular person had 19 QL wallet. With that, they had another 2 wallet. Again, they sent 5 Bitcoin to another address and they sent back to 1 GS again, which is his same wallet. So this is what we call alias transaction. Alias, I mean, another wallet that belongs to same person. And this is what we call change address. I mean, whenever any change is remaining, for example, in this case, 0.41, the change address goes back to my new wallet address. So yeah. Yes.
Yeah.
Okay. Okay. So ma'am, here is it.
So
Ma'am, back to you.
you can expand the screen a bit more.
Sure.
Yeah. So now, in any investigation case, they have seized a lot of hard disks, pen drives, servers, computers, laptops, and all. So we get data from such, whether it's a financial or a digital scams or whichever is the case. The first thing is that seize the data. So when they seized the data in this particular case, they had certain mail dumps from that they have acquired from server. So from the server, we have got the mail dumps. We analyze these mail dumps, and we have seen certain communication happening between the mail between the two persons, and mentioning the mail wallet ID and confirming, asking to send transfer the bitcoins, and also confirm that he has transferred. Also, when it is been withdrawn, it is to be confirmed. So he is clearly communicating with some other person through his mail that you withdraw from this, you transfer to this. So we have got two things. What we got a person who is sending this mail. So the person who is sending mail ID is there. So mail belongs to whom, we have the identity, and now we have the person wallet ID, which belongs to someone whose name probably they are communicating in the mail. So we have two persons names in this communication, this mail. And we also have a wallet ID here. So next step, what we did was, we have gone to public ledger and we have verified the transaction of that particular day or the time when is there really there is a withdrawal or not. So we discovered this wallet and we have examined. If you can see here, this wallet ID has sent, they have so many transactions. You can see here there is a small written load more inputs, 114 remaining. So this many wallets plus 114 wallets, from which these many almost 1.32 bitcoins were transferred to this particular wallet BC1. So we have observed that one BC1 may see, you can see, you expand this, Gaurav. So
Yes.
BC1 is the wallet ID in which 1.32 bitcoins were deposited from collecting from so many wallets in very small BTC in decimal points. So when was this? The hash value here is the establishment of the transaction this particular transaction validity. Whenever we want to see any transaction, we either identify with the hash value of the transaction or with the wallet ID to reconfirm that it is the same transaction. So this hash value is important and the wallet IDs are important, and the date. If you see, the date is being given as 5th February 2021. At 1821 this transaction took place, and from this many wallet IDs there is a deposit of 1.32 blah blah is the bitcoins that has been transferred. So now we have seen whether this BC1 belongs to whom. So then we try to understand what before that, from where they have received this many bitcoins. So we have seen there is a, if you observe this wallet, the first transaction was in 2018. 28 March 2018. After this, there is no transaction in the wallet at all. They have just kept the bitcoins in their coin. They have not operated the wallet. Suddenly, after 3 years, they have transacted and some have deposited into this transaction. We have to remember while investigating when this transaction happened, whether this wallet is active or not, is there a regular transaction in the wallet IDs. These things have to be kept in mind while analyzing the transactions and the trial of the transactions. Go to the next slide.
Yes, ma'am.
So if you see from the same wallet ID, after this transaction, which we have seen in the previous slide, there is a deposit of 1.32. Immediately after this transaction, the same wallet ID has transferred to 1FQ. Can you see this? So when did this happen? Once this wallet BC1 received 1.32 Bitcoins, on the same day, you can see the date and the time. Can you expand this, Gaurav?
Yes.
Yeah. If you see the time,
Visible.
the day they have received at 6:20 1.32, within less than 1 hour, maybe around 1 hour, he has transferred to another wallet ID, 1FQ. So as an investigators, we have to investigate that this belongs to him and this belongs to him. We have to first note down these transactions first, and we have to further get into these wallet IDs where the money, the Bitcoins are traveling. So it is received from this many, then deposited into this wallet, then from here it has transferred to this particular transaction. Please remember, after 3 years, this wallet ID got activated. So go to next slide. So here, if you see, once we have identified these wallets, what we did was, then it has deposited this money into another wallet ID, that is 1NDY. If you see 1NDY, major chunk, this particular wallet ID, we have we have not showing entire wallet ID, because this is a live case that we are investigating. So 1NDYJT is this the wallet in which again it has deposited 24.133 Bitcoins on the same day, almost on the same day, when very immediately. So we tend to, if you see entire cryptocurrencies collected and been transferred to this particular wallet ID. The other small portion that we see is could be a fees or could be a transaction fees, maybe commission, something could have been that. So we are ignoring this portion, but this is the main thing which we are supposed to get into for investigation. So we have gone further into 1NDY, and this we identified. We have certain tools and from which we can find out these wallet belongs to whom. So we have gone, we identified 1NDY, and we found that this belongs to Binance Exchange. So Binance Exchange means this Binance Exchange has allocated this wallet ID to some account holder. So definitely they have the KYC compliant wallet. This is what we are looking at. So probably the other wallet IDs that we have seen are non-compliant. Nobody knows which it belongs to whom. But fraudsters definitely have to have the money once somewhere they have for their expenses, somewhere maybe to give somebody, or maybe to for corruption, maybe as a fees, expenses, for various purposes they do require the money. So definitely at one point of time they have to convert into fiat currency. So they have to get into KYC compliant wallet address. That we have we have reached out to the point where they have touched upon KYC compliant wallet, which is with the Binance Exchange. It's a US based exchange. So we requested through investigating agencies, that is ED and the police, we have made them to write mails, and we could get, we were successful in getting the information of whose account wallet address this is, and they have given us the photo along with photo, address, IP address, and all the details belongs to which country, where, from where this is operated, everything, entire transactions of the wallet ID. And we could find out that this wallet belongs and is operated from one place in our country, and we could identify the computer where it is being stationed and from where the premises from where this transaction is operated. So we could establish all this, and that is what we could give to the police and ED, where we have seen that they have converted this into uh, uh, fiat currency and deposited in bank. In certain transactions, they have converted into Ethereum, certain they have converted into other currencies also. So we have seen that they have maintained in the same mail ID certain uh, persons' names to whom they have used these monies to pay. We could find and establish that he has used this money for his expenses, to pay his lawyer, to corrupt some few persons, to pay other brokers, other agents, and the people who are working with him in his chain. So this is how we could prove in the case beyond doubt, where they have established, and police had with the data that they have received from Binance exchange, they could prove the case in the court. And with the money they have realized from the exchange, they have from bank, we could find out that money they have used in buying certain properties in the country. So this was the end use. We could crack it successfully. So this is one of the case we did. So second case.
I mean, this might be not. Yeah,
Yeah.
ma'am, but I think considering limitation of time, I'm going to skip this one. It's a little more complex, but we need to understand how. I mean, that seems to pretty straightforward, but trust us, it was one of the most tedious tasks, because it was not just one wallet, but there were thousands of wallets that were kept into the watch. And before that, amongst thousands and thousands of transactions, we had to identify which transaction was of interest to us, and for that, obviously, we relied on the information discovered by the conventional sources. By that we mean who brother is, sister is, which mobile, whatever be that. So it's always in the conjunction with what information you are discovering on the ground, and the wallets that provide you a right direction. Now, as you might have seen, here in the attempt was to move wallet to one wallet address, then one wallet address, and then to exchanges. This action is what we call layering. Depending upon the sophistication or the depth or what is at stake, we have seen length wherein up to 300 levels of layering are there. Because the money was, I mean, for every layering transaction, you need to give some fees to the cryptocurrency network. But a lot of criminals, they have enough of deep pocket, they are not bothered about it. So the lot of layering before placing it on the exchanges. So this layering has one of the clear-cut mechanism. It wallet address has only one input and one output. The time difference between both is not that much, and there is a precursor to that. I mean, precursor to that, I mean, you can see clearly a big wallet, then only single wallet, and then other is. So with practice, you would be able to identify layering, but simple thumb rule is that if any wallet address has just one transaction, then that is what we call noise in the ecosystem. I mean, noise on the blockchain. Because any normal person might not waste money on doing even one transaction as of today is costly. So if I'm a normal person, I wouldn't waste even a single dollar on this kind of unnecessary layering. So layer gives us a good indication, okay, is this related to some illicit participants or not? Another way is, like I earlier gave example, cryptocurrency provides us ability to distribute fund on lot of large wallets, number of wallets. So what people do is, there is another type of transaction called peeling transaction. I have, let's assume $1,000, just let's say bigger number, $1 million, and every transaction cost us around $20 on the blockchain as of, I mean, I do not know that today. Let's say cost us $20. What I do is, I take million, I send $10,000 to one address and move rest. Again, I send $10,000 to another address, move rest. Likewise, I do 10 transactions. So from outsider, it might seem that I have distributed my 10% fund in 10 different wallets. But actually what I've done is I've started to peel my amount little by little and distributed it to 10 places. So obviously 10,000 is bigger amount, but people have done the peeling for as little as $500. So this is another type of transaction that people do. Now, just to give you an example, like I said, in the space, a lot of interesting case study has been there. One of the case study that was published was by Israel National Bureau of Counter-Terrorist Financing, wherein they had kept a wallet on the watch. They had created their database. The bad thing with India is we haven't created any kind of a database or the discovery that is happening on the ground. So, but on the other hand, the Israel had created a database and that had opened up this database to the world. So at any point of time, any trigger happened, the exchanges reported to the Israel agency because they provided repository on. So this case study wherein they had identified a wallet address that are of importance to them and they kept a track on that. And as soon as the discovery would happen, the person associated was identified. So this is just a brief chain. I'm talking, these are the veteran criminals. I mean, who want to hide as much as possible. Even they were not able to hide, and look at the complexity of this layering, which is not that difficult. So assuming most of the people who are trying to lean onto the crypto, probably they won't be able to do that much of a complexity. So my point being, analysis on the crypto is going to be easy. It's just that we have to cross that bridge. I'll give you more examples. Initially, Hamas started accepting the cryptocurrency publicly on their wallet address. Now people started sending cryptocurrency thinking that it's anonymous, but it was a stupid decision. Many people, any sympathizer from maybe London, they were sending from their exchange account to this wallet address account, and that was instantly identified. Again, they realizing from their mistake, they created what we call dynamic address. So every time someone went onto their website, they created new and new addresses. Like I said, UPI. I create new address to accept cryptocurrency. They started to create new address, but again, that approach also failed. So, I mean, look at them flaunting the wallet address everywhere here and there. It's just that we have to keep a watch on wallet address, and at any point of time, when we see a right transaction, we would be able to identify that person on ground and then use the conventional technique of gathering more information. Now, again, it's like cat and rat game. You find their upskill, you find their upskill. So the latest trend or the technique that has been growing in the market is what we call mixing. Mixing is like, let's say, because of whatever reason, someone wants to track me and they have given me 500 rupee note with red color of ink. Now, as soon as I spend it somewhere, they would be able to see who the people I'm transacting with. Likewise, there might be some other criminal who are having purple color note, someone else is tracking. Some might be having orange color note, someone else is tracking. Now, what we together do is we decided, okay, orange guy you come with, orange, red guy you come, purple guy, and we mix our 500 rupee note with each other. And I randomly pick out my note and go away. So in that way, someone else who is tracking the yellow would get confused and start tracking me probably. Same happens in the cryptocurrency, wherein people come, they put their cryptocurrency in the bucket, and there is a bucket manager, or we call it a mixer manager, who ensures that how much you have spent it, how much you have deposited. They take some commissions and they provide you rest in the return. In that way, this mixing services work. So the government or everyone, whenever you look at the mixing services, the auditing or the investigation becomes little difficult. Therefore, the law enforcement agency have been very strict in order to identify these kind of mixers and timely kill them down. Tornado was one of the biggest example that was brought down by US, I think, few months ago. So this is another way of mixing things. There are more and more emerging ways coming in.
Gaurav, sorry to interrupt. Yes. We have to wrap up because of.
Yes, ma'am. It's all technicality. So last thing is, yes, most of the things can be done by the manual analysis on the blockchain. If you want to do it, you can go to blockchain.com. If you want to scan the Ethereum wallet, then you can go to itsscan.com. There are blockchain forensic tools available like Elliptic, CoinFirm, chain analysis, or you can take a help of the subject matter expert. At a lot of times, there's an OSINT available. There is not a lot of development in the OSINT, but there's a chain abuser. There's an initiative coming from India that is trying to solve the problem for the India specific. So the ecosystem is evolving. But as of today, the blockchain forensic tools like chain analysis, CoinFirm, have the largest amount of data and provides you some practical tools as well. So obviously, we can move to questions if time remains.
So all the questions are, related to in between the presentations. So just a second.
Yeah.
There is one question which is posted by Satish.
Yeah, Satish is an ex-CBI officer. We worked together in many cases. He must have asked a practical question. Yes. What is it?
How can we prevent money laundering transactions in crypto?
So the answer is straightforward. At exchanges, we need to rely on the certain mechanism. There is enough of information available with the government about the PAN card, and exchanges accept the PAN card. As soon as we see that threshold moving in, we can put that on the watch address. A. B. What modus we have identified on the exchanges is, I as a person, for me, it's pretty easy to identify or gather the fake PAN card and everything and create an account on the exchanges. So there is something called log data analysis, which needs to be analyzed on the real time, or at least not so real time, in order to identify, okay, how many more accounts are being accessed by this individual person or this wallet address or this person. So that's another approach. The third approach is, this is what we have recommended, is disclosure mechanism. As of today, when we are sending money from India to abroad, RBI mandates you to tell us under which section, or there are different codes that I'm sending for IT services or I'm sending for another services. Same as we have recommended that on the automated level, we can ensure this disclosure mechanism at an exchange, so that at least we have some kind of information that can act as an input to identify the money laundering. The third part of it, majority of the money laundering as of today is happening via Angadia or the USDT in the stable coins. So we have seen not many, but number of cases wherein existing Angadia network has moved to a stable coin like USDT and cryptocurrency. They are actively transacting on the Binance, especially Binance and Chinese exchanges, in order to take cash from the ground, convert it into USDT and move money thereafter. So if we have to track the money laundering, I think that is a very generic answer, but based on what exactly is the objective, I will be able to define the roadmap around it.
Yeah, to supplement Gaurav, Israeli model, as you rightly said, is a very good model. 3 parts. 1, KYC compliance. 2, monitoring. 3, reporting to concerned authorities for immediate action. All the 3 put together happens only we can control. Otherwise, it is impossible.
Sir, one more suggestion is the wallets, whichever is already established in investigations, should be, those wallet IDs should be red flagged in public domain, the way the other countries does. So we could track one case in the case where some terrorist funding was happening. We identified that this is belongs to a terrorist based on those countries to flagging that this belongs to a terrorist. So this kind of mechanism, wherever the cases,
you can't conclude terrorist suspect origin. Then somebody else will establish whether they are terrorist or not. Generally,
no, it is red wallet ID is red flagged with the name.
Well, correct.
So there's one more. The competency. Blockchain is a beautiful tool. It's pretty easy. I'll give you one case study wherein we did a proof of concept. We said to XYZ people that blockchain has enough of information. Just to give you proof, we created account on one of the Indian exchanges. We deposited a small amount of Bitcoin onto that. We knew our wallet address, and they deposited that Bitcoin to their treasury, their core account, wherever they are. And that's how we were able to discover their treasury. For 6 months, we kept an eye on their treasury. And with that, we were able to identify their sub-treasury and discover where their core money is lying on the wallet. Now, what we did it, because I, as an individual on the exchanges, a lot of time I tell exchanges to transfer to international exchanges for whatever my personal reason is. And based on that treasury analysis, we are able to identify 2.9 lakh individual wallet address that are transacting with this Chinese exchanges. Now, there are 2-3 possibilities to that. A, these people are innocent who are also having Indian account and Chinese account and transacting with that. B, these people are individual who are having Indian account but not disclosing about their Chinese account. C, someone who is transferring larger amount of fund probably can be someone who enters into money laundering. So enough of information is available through blockchain analytics. Only it is that we need to bring it on the practical level, implementation level.
Good. Yeah, Lakshmi.
Yeah, so this is our presentation. Any questions?
Any questions, Lakshmi? Both are Lakshmi's.
Yeah.
Host and the presenter.
So no more questions.
Yeah.
Yeah, thank you for such an informative session, and it was very interesting, like with practical examples and case studies. So I thank you on behalf of ACFE, and I request Vijay sir to present you the mementos virtually. We will be sending it to you in a week or so. So thank you.
Thank you. Thank you.
Thanks, Lakshmi and Gaurav, for the nice
Thank you, Sarath
presentation.
sir, for providing this opportunity. It's a privilege to speak with Lakshmi Rao ma'am and under your aegis. So just want to tell everyone that it's only with the Sarath sir and Lakshmi Rao ma'am that I started my practicing. I'm just a tech guy and I have been learning and doing under their guidance.
You're
So
very
thank you
good.
for this opportunity.
Same thing from me. I have been, Sharath sir was my mentor throughout my career. So with his blessings and his support, we are able to achieve all this.